stop looking at Nvidia for just 30 seconds? Seriously. While Wall Street has been distracted fighting over whether the AI bubble is finally popping, something massive shifted in the global markets over the last 48 hours. A Chinese app you have probably never heard of just stole 700,000 users overnight. But that is not the news. That is just the Trojan horse. Because hidden behind this viral app is a much bigger financial story. A new IPO is hitting the market that is directly targeting Nvidia's throat, and an economic pivot is happening right now that could leave US-only portfolios in the dust in 2026. Most investors are ignoring this. They think the China trade is dead. But I'm going to show you the two specific tickers driving this China renaissance and why the so-called uninvestable market might just be the most profitable hedge of the year. Welcome back to Stockomo. Let's follow the money. First, we need to talk about the soft power trap. The app is called Rednote. If you've been watching the headlines, you might think this is just a Gen Z trend, but as investors, we don't care about dance trends. We care about data. And the data here is terrifying for Meta and Google. Rednote, known as Xiaohongshu in Asia, has historically been a walled garden, but suddenly it's exploding in the West. Why? Because while US regulators are busy trying to ban TikTok, users are simply migrating. Here's the investor takeaway. This isn't just about social media attention, it's about advertising revenue models. Rednote is capturing the high-value lifestyle demographic that usually lives on Instagram. If Rednote becomes the Instagram killer of 2026, it shifts the advertising revenue models for Western big tech. But that's just the consumer side. That is the distraction. The real money isn't in the app you scroll on, it's in the chip that powers it. And this is where things get dangerous for Nvidia bulls. While you were watching the Magnificent Seven, China quietly IPO'd its answer to Nvidia. And you need to listen closely here because this is no longer cheap knockoff technology. More Threads has unveiled the MTT S80 and the new S4000 series. Now, let's be objective. Is this card faster than an Nvidia H100? No. But does it need to be? Also no. It just needs to be good enough and, more importantly, sanction-proof. By building their own domestic GPU ecosystem, China is effectively cutting the cord on US tech dependence. Think about the math. For every dollar a Chinese enterprise spends on a More Threads card, that's $1 of revenue lost from Nvidia's future guidance. Wall Street hasn't priced this in yet. They still think Nvidia has a total monopoly. But history tells us that monopolies don't last forever, especially when a global superpower decides to build its own hardware at any cost. The ticker to watch here is on the Shanghai Exchange, code 688795, but the ripple effect will be felt in the Nasdaq. And this brings us to the macro environment, which traders are now calling Beijing Time. For the last 2 years, the narrative was simple. China is uninvestable. And honestly, for a long time, that was true. But we're seeing a rotation. Institutional patience is finally paying off. The massive stimulus measures that were announced late last year are finally hitting the balance sheets. We're seeing industrial profits stabilize. We're seeing consumer sentiment tick up, driven by platforms like Rednote and domestic pride in tech like More Threads. The China is uninvestable narrative was the most crowded trade of 2024. And if you know anything about this channel, you know that when everyone agrees on something, the market usually prepares to do the exact opposite. Smart money is quietly hedging. They're buying the China comeback, not because they love the politics, but because the valuations are at rock bottom. Meanwhile, US tech is priced for perfection. One miss on earnings from Microsoft or Apple, and we could see a 10% correction. In China, the bad news is already priced in. So, what's the trade? Do you sell everything and go all in on China? Absolutely not. That would be reckless. However, a portfolio that's 100% focused on the US dollar and US tech is now a risky portfolio for 2026. You need exposure to the rotation. Here's how the smart money is playing it. First, keep a close watch on KWEB. That's the Chinese Internet ETF. It holds the software giants that benefit from the Rednote explosion. If KWEB breaks above its 200-day moving average, that's your technical buy signal. Second, watch the news flow on More Threads. We're looking for a specific catalyst. a major contract with a non-Chinese company. If more Threads secures a deal in the Middle East or Southeast Asia, the Nvidia monopoly narrative cracks. And when narratives crack, stocks re-rate fast. The markets are changing. The easy money of simply buying the S&P 500 and going to sleep might be over for this cycle. We're entering a period of competition. Hard power with chips and soft power with apps. I'm going to keep tracking the institutional money flow into these tickers every single week, so you don't have to guess. If you want to stay ahead of the narrative instead of chasing it, make sure you smash that subscribe button. We don't just read the news here at Stockomo, we read the charts. Let me know in the comments below, is more Threads a real threat to Nvidia or just hype? I read every comment. Thanks for watching, and I'll see you in the next one.